You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 21st day of August, 2023. Thanks so much for joining us. Wherever you are, we're just glad to have you right here, right now. Hope you had a great weekend. But now it's Monday once again. Overcast and big storm coming. Kind of Monday here in Phoenix, Arizona. So, hopefully you're safe and dry wherever you are. We do 2 live broadcasts every trading day. First live broadcast is our live trading room. That's reserved for members only and those who are taking their 1-week free trial. If you haven't taken your 1-week free trial, you can do so by going to mytradingiq.com. And at the very top of the page, there's a button that says 5-day free trial. All you have to do is click it, complete the registration form, and you're off to the races. We'll get your desktop and your indicators all set up for you. Doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial. Once we have your desktop and indicators set up, you will get 5 consecutive trading days, even if it stretches over a weekend. And you have access during your trial not only to the live training room, but also everything else CFRN. Everything that all of our lifetime members have access to, you have access to. No credit card required for 5 consecutive trading days. Weekly zones, logic alerts, concierge trade alerts. The list goes on. Now, most of those things are only available to passport holders. A passport holder is someone who has lifetime access to everything we do, everything we've ever done, and whatever we do in the future, with no recurring fees. No upsells, no nonsense. Pay once, member for life. It's like family. Once you join, well, then you're in it for the long haul. Use what you need, leave the rest behind. When the live training room ends every day, at 11:30 a.m. Eastern. Take a 30-minute break and come back for the afternoon broadcast. That would be this one at 12 noon Eastern. There's 2 different ways you can join this afternoon broadcast live. Best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click that link, complete that 30-second registration form, and you're done. Going forward, every trading day, you'll get an email about an hour before the broadcast starts. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Now that's the better way because it gives you access to the question box so that you can ask questions and participate in the discussion. There will be days that your out of the office, away from your desktop, but you still want to join live, you can do that. And there will be days when you're busy and you can't join live, but you wish you could. Well, we can solve both of those situations with our YouTube channel. youtube.com/CFRN. Easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there's over 2,300 daily live episodes archived for your educational and viewing pleasure. If you are new to the world of CFRN, it's a great way to get to know who we really are and see how we've evolved over the years. Thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, even more. Or if you just missed today's broadcast, you can go straight to today's broadcast when you're not busy. Again, if you're new to the world of CFRN, it's a great way to get to know who we really are, because you can scroll back and just pick days at random. And you don't have to listen to the entire broadcast of every episode, but you should do it at least over a period of time where you just listen in a little bit so you really get to know who we are as a community. You'll see the thread of connectivity, the thread of continuity that is woven through each and every daily broadcast. youtube.com/CFRN. So with our daily devotional and a word of prayer, as we do every day, and we're wrapping up our topic on good Lord. Psalm chapter 3, verses 1 through 3. This is from the Message translation. God, look, enemies past counting, enemies sprouting like mushrooms, mobs of them all around me, roaring their mockery. Ha! No help for him from God. But you, God, shield me on all sides. You ground my feet. You lift my head high. With all my might, I shout up to God. His answers thunder from the holy mountain. In many Bibles, a heading is included above Psalm 3. And that heading says, a psalm of David when he fled from his son Absalom. Now that might seem confusing when we consider this is the same guy who faced Goliath and believed with his whole heart that the Lord will rescue me from the hand of this Philistine. 1 Samuel 17:37. In Psalm 3, David seems far less confident in God's goodness. His world was crumbling around him, and he heard others say, God isn't helping me out this time. Here's the thing. David didn't always rest completely in God's goodness. Sometimes he wrestled with his circumstances and the legitimately awful state of his life. But in those times, he was again reminded of the truths he knew about God's character. What began as desperation and uncertainty quickly turned to the everlasting fact that God is always good. David's son had betrayed him, but he had a good Lord. His enemies were increasing, but he had a good Lord. People were literally attacking him, and no one thought he had a chance. But David had a good Lord, and he decided to remember that truth stood above everything else. Even as we mark God's goodness in our hearts as Ebenezer stones, which we talked about last week, so I think if you go back to last Thursday's episode, you'll catch the part about the Ebenezer stones. There will still be moments when we forget in our human nature. God doesn't always feel good at the moment. What do you do then? Choose to focus on the good. Say it out loud if you need to. Sing songs about God's goodness. Let the truths of who God has shown himself to be in the past reframe your feelings in the present. David has a good Lord, even in those moments when he and others couldn't see it. And the good news is, so do you. Let's let God's goodness help build our faith. The truth is, God is good, even when our circumstances are not. What do you do when you don't feel like God is good or have difficulty focusing on anything other than your circumstances? How does God's goodness protect us like a shield from all that stands against us? Name the circumstance you're presently struggling with. There's probably more than one. And after each one, read Psalm 3:3. Thank God that he is good, even when it doesn't feel like it. Join me in a word of prayer. Heavenly Father, in the midst of life's challenges and uncertainties, I turn to you as my shield and my source of strength. Just as David declared in Psalm 3, I know that you are my protector, my refuge, and my sustainer. Lord, when doubts and fears arise, I trust in your unwavering love and faithfulness. You are the lifter of my head, guiding me through the darkest moments and leading me into the light of your presence. Your promises are my anchor, and I hold on to the assurance that you will answer me when I call. Help me to always seek your face, to keep my focus on you despite the challenges that surround me. Grant me the courage to face each day with confidence, knowing that your grace is sufficient and that your strength is made perfect in my weakness. Thank you, Lord, for being my rock and my salvation. I surrender my worries and concerns to you, knowing that you are in control of every situation. May my life be a testimony of your goodness and mercy, reflecting the peace that comes from placing my trust in you. It's in Jesus' name we believe and pray. Everybody said, amen. Amen. Happy Monday. I hope it is a happy Monday for you, whoever you are and wherever you are. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Right now the Dow is down 182 points. NASDAQ up 75. S&P 500 basically unchanged. And the Russell 2000 down 12. No movers, no shakers. In the commodity basket, crude oil up 54 cents, trading 81.79 last. Gold up $1.70, trading 19.1820 last. Silver up 47 cents, trading 23.21 last. That's a gain of a little over 2%, or almost $2,500 per contract traded. In the Asian markets at the close, Nikkei up 114 points, Shanghai down 38, the Hang Seng down 327. Now for the Shanghai, that's a drop of 1.25%. For the Hang Seng, that's a drop of almost 2%. And in the European markets at the close, FTSE down 4, DAX up 29, CAC up 33. So that gave us a mixed day in Asia, a mixed day in the UK, and it's a mixed Radio Monday here in the US of A. S&P is in the green, less than a point, so we have that, and the NQ in the green. The Dow and the Russell are firmly in the red. As futures traders, we like to see the four major indices, the S&P, the Dow, the Russell, the NQ, either all red or all green. We don't care which, because with futures, we can be long, short, and long again, all in the same hour, if that's what the chart in front of us tells us to do. It's mixed days like today, where trading can sometimes be difficult, where we don't have the follow through that we experience when all four of the major indices are all green or all red. So what do? Trade what's in front of you, or take the day off. You are the boss of your trading business, so it's entirely up to you. All right. Logic 247. That's our 24/7 around-the-clock Emini alert service. The Logic 247 alert channel opens for business Sunday night at 6 p.m. Eastern and remains open around the clock until Friday afternoon when the markets close at 5 p.m. Eastern. Now, the Logic alerts are open to members, passport holders only, and those who are taking their 1-week free trial. Again, if you haven't taken your 1-week free trial, you can do so by going to mytradingiq.com. Last night, we issued a total of 6 alerts. Still waiting on 2. Now, this recap's valid through 7 a.m. this morning. Valerie will update it this afternoon. So we had 4 actionable alerts, of which 1, or 25%, would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure, and a simple process that I teach all of our passport holders in their unlimited one-on-one mentoring sessions. It doesn't mean you risk $300 on every alert. Depends upon what you plan to do with the alert. The alert itself is simply a training tool to help you spot windows of opportunity in the market. When price reaches the area of the alert, all you have to do is what you've learned, been taught to do every day in the live training room. Many of the alerts will have multiple targets. If you know you're going to get out at the initial target, which is designed to help you get your goal for the day, then your risk should be commensurate with that. Your plan is to stay in all the way to the final trade to target. The maximum you should ever risk is $300 per contract per trade. On the ES, as an example, at $50 a point, that would be 6 points. Now, I didn't just say you risk 6 points on every alert. I said you use market structure to determine where you're going to place your stop, and that's based upon how long you plan to stay in that trade. Do you think it has the potential to get all the way to the final target? Or are you just going to get your goal for the day and put the mouse away? These are things that you learn over time in your unlimited one-on-one mentoring sessions when you become a passport holder. And again, as a passport holder, there's no recurring fees, no upsells, no nonsense. Lifetime access to everything we do, everything we've ever done, and whatever we do in the future. Over the last 264 weeks, we've issued over 14,900 individual handcrafted alerts. And what we've experienced is 20% or less of the alerts being stopped out over the last 264 weeks. I think last week we ended up around 18%. 20% or less has held for 264 weeks. Along with the Logic 247 alerts, we also have our original alert service, the Concierge Trade Alerts. Now, the Logic alerts, again, come out around the clock because futures trade around the clock, and we have traders around the globe. However, Concierge Trade Alerts, or CTAs, don't come out around the clock. They're published as a static report shortly after the Globex open each evening, which is 6 p.m. Eastern, Sunday night through Thursday night. So we're in the Monday session right now, but the Monday session began last night at 6 p.m. Eastern when the markets opened. This afternoon at 5 p.m. Eastern, the Monday session will end. There'll be a 1-hour break. The markets will reopen. And even though it's only 6 p.m. Eastern here in the U.S., that will be the beginning of the Tuesday session. The Logic alerts are based on current price action, but there's plenty of time built in to receive the alert, go to your 30-minute chart, see with your own eyes the window of opportunity that the alert represents. That is the purpose of the alerts, to help you learn to find windows of opportunity in the market. The more times you repeat that process, get the alert, go to the 30-minute chart, pretty soon you'll start to see the windows of opportunity yourself. And that's our goal, is for you to become self-sufficient. And hopefully that is your goal as well. You don't want to spend the rest of your life depending upon someone else to tell you when to get in and when to get out. You want to be able to look at a chart, any chart, futures, stock, crypto, forex, ETF, doesn't matter, because price flows the same across all markets and all time frames. So you want to get to the point where you simply need your chart, multiple time frames, okay? If you just trade off a range chart, you're going to get tunnel vision. You have to put what the range chart is showing you in context, which is why all of the alerts, the logic and the CTAs, are based off the 30-minute chart. Cover all the same markets with the CTAs as we do with the logic alerts. When this report is published, it's good for the entire session, doesn't change. So last night at 6:05 p.m., 5 minutes after the market opened, all of our members and trial members had access to these targets. So what do you do with this information once it's published? First thing you do is, number one, just worry about the markets you actually trade. Go to the 30-minute chart of that market or markets and make note of where price is at the time the report is published. Also, while you're doing that, draw a line in the sand at the long target, a line in the sand at the short target. Price will always be between these two numbers, or these two numbers, or these two numbers. Drawing a line in the sand at the long target and at the short target, those serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. You have to look left to spot potential obstacles, previous swing highs and swing lows, and know how price behaves at a weekly trading zone. The logic alerts, I've already looked left for you. That's why there's an initial target and a second target and a third target and a fourth target and then a final trade to target. The weekly trading zones, over time, you will learn how to utilize those properly. Over time, you'll learn how price behaves at a weekly trading zone. Only 3 things can happen when price encounters a weekly zone. 70% of the time, it's consolidation. 20% of the time, rejection. 10% of the time, it's what we call the slice. We've published the zone since December 14th of 2009. They're published for our members Monday morning, 6:15 a.m. Eastern, so everybody has a chance to get them on their chart before Wall Street even wakes up for the week. When we go to my charts, you'll see last week's zones, because the alerts issued on Sunday night are based on last week's zones. Tomorrow's broadcast, you'll see this week's zones on my chart. Any alert that goes out after 6:15 a.m. Monday morning is based on the new weekly trading zones. You just have to resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal today. Now, this broadcast is open to the public, so if you're not a member or trial member, you didn't get these last night at 6:05 p.m. Eastern. If you want to grab a screenshot, go ahead. If you're watching after the fact, you can just hit pause and jot down whatever markets are important to you. Okay. All right. Let's go look at the daily chart. Well, we've made our pullback on Friday. to the 24% Fib retracement. And we said that when price finally got there, we would probably see a pretty decent bounce. And we did. We bounced. Here's the 24% Fib retracement, 43.67/68. And from 67.68, we bounced all the way up to 44.08. It's about a 40-point bounce. Okay, we got some of the bounce on Friday and a continuation of the bounce last night. But this same area that we said would be some potential support and give us a good bounce, which it did. We said on the way back up, that would likely become resistance. And it has. You've got three things here. Resistance times 3. What was once support often becomes resistance. You've got the step line. You've got red and falling. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. Stands for bull, bear, cross. When price crosses above the BBC, we're bullish and anticipate higher prices. When price crosses below the BBC, we're bearish and anticipate lower prices. Price rarely moves in a straight line. As you can see, we had a leg, a retracement, and a leg, and a retracement, leg, and a retracement, leg, and a retracement. And then when the step line crossed and we started to get this rounding top, we discussed the fact that this pullback very well might not hold. Because even though the pullback holds more often than not, we know eventually it will trade through. And when it does, we start building legs in the opposite direction. Leg, retracement, leg, retracement, leg, retracement, leg. Now the question is are buyers committed enough to take us above this potential resistance and push us all the way back to the BBC? Where we close today will give us a good indication. If we close above red and falling, then chances are, and if the step line crosses red and falling, there's a high probability that we're on our way back to the BBC, which we still expect to be resistance till proven otherwise. Just as on these pullbacks, we expected it to be support until proven otherwise. If we close today below the 24% Fib, the next important area is Friday's low, which was 43.50. After that, we've got this area right here, 43.05.06. You got this area right here, 42.17/18. And then you're down to the zone, 42.02/03. And the market won't move in a straight line. It will drop the same way it climbed up. Now, when buyers hit the pause button and it becomes obvious, the institutions that specialize in short selling will come out of the woodwork, and price can drop a whole lot faster than it climbs. It takes financial commitment for price to rise. For price to fall, all that's required is that institutional buyers hit the pause button. And even in the absence of short sellers, price will begin to deteriorate. The institutional traders, the ones who actually move price, they look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. That's why I always look at the daily chart so that I can identify where major resistance is, where major support is, and if there's indecision in the market. Bit of doji on Friday, and we don't have much better today so far. Still got a few hours before the market closes, but the path of least resistance at the moment is to the downside, at least to Friday's low. Now remember, we spiked the fib, but we still caught a very nice bounce. Institutional traders have fibs on their daily, weekly, and monthly charts. Fibs are not proprietary. They're 14th century math. Whether you're doing fib retracements or fib extensions. So when you're able to look at the same thing the institutional traders are looking at, and once you understand how price flows across all markets and all time frames, support to resistance, back to support, back to resistance, over and over, again and again, in a never-ending cycle, then you'll understand how logical the market really is. What once seemed like chaos when you looked at a chart will over time start to make perfect sense. You'd want to be able to read the chart the way you would a newspaper or a good mystery novel. The vertical line on the 30-minute chart, and again, all alerts are created on the 30-minute chart. 30-minute chart's not a magic number. It's just the number I chose and have become comfortable with over the years. That serves as my roadmap. Daily chart shows me what the institutions are doing, shows me if there's indecision in the markets. If there's indecision in the markets, then I can expect a little follow-through. That's what this is. Where are we? We're right back where we were when we opened last night. That's not follow-through. Okay? So we opened at the zone. We dropped a little bit. And then we ran into some support areas. So on Friday, how the market tried to go down and it left in its wake a bunch of wicks. So price came down into that area, found support. Here's the London Open. And the 30-minute candle after the London Open, 3:30 a.m. to 4 a.m. Eastern, took us right to the target. And then the step line crossed blue and climbing. That told us to expect a pullback to the BBC, which we got. Pullback held, but as we bounced up, we ran into red and falling, which we expect to be resistance. Blue and climbing is bullish. Red and falling is bearish. Think support, think resistance. Once blue and climbing gets directly above price, it also serves as resistance because it's most likely on its way to becoming red and falling. Just as when red and falling gets directly below price, it becomes support because it's on its way to becoming blue and climbing. When price rallies up to a weekly zone, we expect resistance until proven otherwise. When price drops to a weekly zone, we expect support until proven otherwise. This low defined on Friday. Okay. Now we're pulling back to the BBC. Again, these are last week's zones because the alerts issued last night were based on last week's zones because this week's zones didn't come out till 6:15 a.m. Eastern. So tomorrow you'll see this week's zones on my chart. So now we're pulling back to the BBC. If the pullback holds, we'll get another leg to the downside, which might take us to the short target. On the Dow, price opened above the BBC. We ran sideways. London Open, following 30-minute candle, and we hit the target. Price drops below on this pull. Remember, the step line crosses. Price pulls back to the BBC. This time, the pullback didn't hold. As you can see, it holds more often than it doesn't. Pulling from below, it holds. Pulling from above, it holds. But eventually, it will trade through. That keeps the markets fluid and tradable. So as we trade through, we then pull back to the VBC, and what happens? Pullback holds. We have the perfect stack on the way down. Price, step line, red and falling, BBC. And we dropped right to the target at 34,405. The perfect stack on the way up, perfect stack on the way down. On the Russell, we opened above the BBC. We had that same pullback. There's London, and there's the target. Then, price gets below the BBC. Price pulls back, finds resistance at red and falling. So the pullback to the BBC holds. We spike up to red and falling. Now we have the perfect stack on the way down, all the way to the target, which was defined on Friday. Now the step line is starting to cross red and falling. It hasn't crossed yet, but once it does, then you anticipate a pullback to the BBC. You expect the pullback to hold till proven otherwise, and when it does hold, then you look for another leg to the downside. It's that simple. Don't let anybody make it more complicated than that for you. Because they will. Because they have 1,000 different solutions to sell you to solve problems that don't even really exist. Price can only do 3 things. Go up, go down, go sideways. If the market's going up, you should be long. If the market's going down, you should be short. If the market's going sideways, you should be flat. Pretty simple, huh? Here's where we opened last night. Price pulls back to the BBC. Probably already figured it out. There's a London open. And then the next 30-minute candle hits the target. And we make a run all the way up to last week's zone. We get back below the BBC, just enough to touch the target. But the pullback held, overcame the step line, overcame red and falling. Now it's chugging its way along, trying to get up to 14,917. I mentioned this morning in the live training room that price was reversing. In the room, they were looking for higher prices, but I put a message in to let everybody know that price was reversing off last week's zone. Because going along from here was, well, not fruitful. Crude, we are in the V contract. Here's where we opened last night. Price got above red and falling, and we hit the target. Price ran up to the zone, pulled back to the BBC, ran up to the zone, pulled back to the BBC. This time we get below it, and then we pull back up to it, and what happens? The pullback holds. So here, we had a leg and a retracement, a leg and a retracement, and a leg. Now that we're below the BBC, what do we have? A leg and a retracement and a leg. Now, this area right here, where the bullish cross happened. Whenever there's a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support, at least on the first test. Same is true of a bearish cross in the opposite direction. Gold. We opened below the BBC. We dropped to the short target. We consolidated at the weekly zone, which is what we do 70% of the time. And then below the BBC, drop almost to the target. above the zone, ran right up to the long target. See this high? See this bearish cross? And on the euro, here's where we open. We hit the zone, hit the target, hit the zone, found resistance at the zone, pulled back, and now it's trying to hit that zone again. These are last week's zones. This week's zones will be on my charts tomorrow during the broadcast. Michael's here, so he'll give us a recap of what happened in the live training room, and I guess we're going to trade 30 minutes live on the TradingView platform.
Yes, we are.
And then we'll wrap it up with a good word for the day.
Excellent. All right, so let me bring it over here. And here. Come on. Here it goes. There it is. All right.
Looks good.
So, very good. Thank you. All right. Afternoon, everyone. Today is Monday, the 25th of August, 2023. If you've not taken a free trial with us and you want a free trial with us, go here to mytradingview.com. Right here, click on that. Once that, it will be sent to this page, the registration page. Just fill out this form, right? We don't ask for any credit card or anything like that. Just fill out that form. Then we'll leave all the information you need to get into the room in the morning. Once you get into the room in the morning, or even before you get into the room in the morning, preferably before, go to trading platforms and give us all the information we need to get your desktop set up before you get into the room. All right. It's really a simple process. It's, if it takes you more than 5 minutes, you need to get in touch with us and one-on-one training with you to make sure you are set up. All right. You want to be set up at the beginning of the trial, right? Preferably. Watch videos in here. These are the rules for the trade setups. All the trades we take, they meet these rules. Every trade meets these rules. If it doesn't, I made a mistake. We ended up paying for it. These are videos of me actually placing the trades and doing all the stuff that we do in the morning over and over and over again. Okay. Now, today we had a good morning. It took a little while to get the goal for the day, but we still had a pretty good morning. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today's the 21st day of August 2023. We made 86 ticks on the NQ. We lost 9 on the Russell. We made 13 in gold, and we were break even on the ES. Today it took 19 minutes and 7 trades to get to $1,520. And that was 8 contracts. So it was like $180, I think, per contract, something like that. But $1,520 is where we were, and we took a total of 13 trades today. So not a ton of trades, but it all worked out okay. On the month now, we're at $5,727. That's over 14 trading days, averaging $409 per contract per 2-hour trading day. We've gotten our goal for the day 154 out of 158 days so far this year, and that puts us at $69,869 per contract during the morning session. Now, if you were to quit trading and add 1 contract per month, quit trading when you get your goal for the day, and add 1 contract per month, so far this year, and this year you would have only had to work 47.6 hours. You'd be at 8 contracts right now. You'd only had to work 47.6 hours, and you would have averaged $2,052 per hour. Those 47.6 hours. It's like this month so far, we've worked about 3.5 hours, and with 8 contracts in those 3.5 hours, we're up $16,180. All right, quitting when we get the goal for the day. So that's where you want to be. Yeah, let's get into the actual trades. Okay. On gold, we had just a couple of trades this morning. You will see we trade here. And we picked up, on the first trade, we picked up 7 ticks. On the second trade, we picked up 6 ticks. Okay. And those were the trades for gold this morning. Put in lower swing. And gold was, it was acting nicely this morning. It was doing everything that it should do. It just wasn't doing it very fast. It was doing it. It was just doing it very slowly. So if you had patience, you stuck around and watched the whole thing, you did all right with gold. The Russell did okay, but I didn't. The Russell did what it should have done It just took it a long time. And it stopped me out a couple of times. So let's get into that. Well, it stopped me out once. But let's get into that. You see all these little no trade zones here on the Russell. Let me do this. And we started in the pre-market with the Russell. We stopped out on the very first trade. Now that pretty much stopped us out to the tick and then went and did what it should have done. That was right at the open. It stopped me out, -10. And then I never came back from that. That would have been another stop out there. Then you could have gotten it all back right there for both trades. This one here would have gotten enough to get the goal for the enough to get something anyway. Just stop to break even is what I meant to say. Same thing. This one didn't put in a higher swing, so you wouldn't have done either one of those. This one was enough to get your stop to break even. This one would have stopped you out, but I don't know if you would have taken that because right here you had a trade off the rim that was interesting. Then we finally took our second trade in here. We got 6 ticks on this one, right? We got 1 tick on that one, right? We got 1 tick on that. And this one here, it was at the end of the training that I was doing, and I was saying on this one that this is the leg length, so we expect it to go to this leg length. This is the pullback. We expect it to pull back this much, and this is what it was saying it should go down to in the weekly trading zones. This was the midpoint, and I was saying this is where it should go down to. So if you got short way up here on this one, which we did do, and if you left your stop where it was on that trade, and you put a target all the way down here at 1849, you did pretty well on that one. And that is what I suggested people do if they were still in that trade, if they didn't get out with me. Yeah, let me spread this out just a little bit here. I'm trying to spread out. Joseph, I did get your text message. I'm going to respond to it in a few minutes. Well, I can respond to it right now, as a matter of fact. Now that I think about it. Yeah, I did in here, Joseph, if you're still watching right now, I did in here take out the short-term trend because you can see it. You don't really need to see it anyway, but you can see it in the outer bands. But I just took the off, okay? And I made the no trade zone right here. The upper one right here, I made blue, this kind of aqua color down here. So the trade zone is like this instead of red, okay? But up here, these outer bands, if they're both red, I mean, if the color is red on the outer band, that means both the long and short term are bearish. If it changes to white, but it's going down, it means the term changed. And going up, if it's blue, that means they're both bullish. If it changes to white, that means the short term changed. So you can see it in the outer bands. You don't really need to see it in the colors. Just adds more stuff for you to think about. Let's see, and so that was the Russell today for us. During the break, after getting down here, no, we said it was going to go down here to 1849 is what I had said. And it did. It got right down to 1849 and then changed directions on you. There was no trading in here. All right, you would have done nothing in here. And so this would have been the first trade and it would have stopped you out and gone right into some chop. That was the Russell today. It's 12:55. Okay, 55. We don't have much to say about the ES. We had 1 break-even trade, I think. I'm not even sure about that. Break-even trades. Okay, 2 break-even trades on the ES. 1 there and 1 there. What are all of these little arrows? Huh. What do I got going on there? Oh, I know what it is. I know what it is. Okay. You can ignore those little arrows. Yeah, let me put this context on. Take this context off. There. You can ignore those little arrows. That's something I'm working on for you guys in the future. It's gonna make it easier for you to see the super high probability trades. Just look, let me put that back on for a second. See what I was looking at. Yeah. See what it's going to do is when you have a super high probability trade. When I finish it, what I think I'm going to make it do is put like an arrow on both sides of the bar. You're going to have like a green arrow going down and a green arrow up. Saying this one right here. Pay attention to this one. in here. It's monitoring in here. When all these blue arrows come along, it's monitoring. Pay attention to that stuff in the future. All right. So the ES, we just had 2 break-even trades, and that's it. In the break, it had all this right here. So really nothing good during the break. Okay. And now on the NQ, we had a fair amount of trades on the NQ. Not a lot by any means for us, but the NQ did what we had thought it was going to do too. That's what this red line is right here. It went down to that level that we thought it was going to get right here. This is where I thought it was going to go down to. Slide it all over. Slide it all over. Okay, here we go. So the NQ is where we actually got our goal for the day. I think. Isn't it? Yeah, well, kind of. We started out with a stop out on the Russell, and we had this right here, which was a 4-tick gain on the NQ, and then we stopped out. So we had minus 20 there. That put us at minus 16. And that was in the pre-market. Then the markets opened up, and we had a plus 30 on this. That got us to plus 14. Then we had a small gain right there, plus 4 ticks to get us plus 18. And then right here, we had a plus 30 to get us to 48. That's where we got the goal for the day. Right there, I think. Not sure. And if we did any more trades, I didn't take any more trades through here. We did get another nice green arrow right there. Even the black arrows are working out okay. We didn't do anything else. So way over here, we got a break even on that move. Then here, we went from 48. Somewhere in here, we stopped out. We went down to 18. I'm sorry, went from 14 to 18 to 48, then to 56. Okay, we didn't stop out. Went from 48 to 56 right there. Then we had a break even. And this in here, when I was explaining what should happen with the markets, that's what all this was in here. All right, this was the swing high, and this was what the leg length was suggesting it should get up to. Okay, and this is what it should not pull back through. And if it does pull back through this out going above the prior swing high, then it's a reversal. And that all came together and happened right there. Okay, right there. That was all what that was about. YouTube wants to know how to get the webinar room so we can ask questions. Oh, Joseph just left. I don't know about that. Dwayne, did you see that message in there from Joseph? There's somebody in YouTube that wants to know how to get the webinar room so we can ask questions. I don't know about that. But anyway, in here, the next trade that we took in here went from 56 to 86. We had another 30 ticks right there, and then I believe we got into the training. Yes, they got it at the beginning. But anyway, I don't know how to tell anybody in YouTube that information. But right here we had a break-even trade. Okay. MyTradingIQ.com. Let's go and do that. MyTradingIQ.com. On the home page. Yeah, right here. This one, right? Yeah, click on that link. Yeah, to get in here. That's how to get in here. Right? But they're on YouTube asking, so I don't know how to tell them that on YouTube. Yes, but the person that is on YouTube right now, that was a statement from somebody else saying there is a member on YouTube who wants to know how to get the webinar room so you can ask questions. So Joseph, the answer to that, to get to the room, is go here. Like Dwayne said, yeah, I know. I know he's at, but the answer to that, as we used to begin with, is to go here to mytradingiq.com and scroll down here and click there. That's what you said be, and that is the correct answer. Yes. Oh, okay. I know it's the YouTube thing too. Ouch, I just realized the time. Okay, so guys, that's where we ended with the NQ, ended with plus 86. There was a bunch of stuff that happened during the break that I can't get into right now because we're going to jump in the live stream. No stream, I just hit start stream and start streaming over there. G streaming. Hang on. There it is. Okay, I should be streaming now. All right, so we're going to do some more trading here now. What I was saying earlier, we ended the morning pretty well with the morning session. We were up 86 on the NQ. We lost 9 on the Russell. We're up 13 on gold. Break even on the ES. Now, since then, since the morning session, the ES has since the morning session, it's had some black arrows, but it hasn't pulled back deep enough to give us a green arrow. Other than this one right here, it hasn't given anything else. All right. It looks like it's trying to pull back here to test the ribbon, but it hasn't quite done it yet. It got pretty close right there, but it didn't actually hit it. If you're in here and you live stream, you could be watching it now, or you could be watching it later. If you're watching it later, you're going to be notified when we do live streams. Follow us in TradingView, and then you'll be notified whenever we do a live stream. Those of you who don't know, we will be doing one tomorrow morning, a live stream tomorrow morning, starting at 9:15 a.m. 9:15 a.m. Okay. And let's see, on the ES right now, we're waiting for that to pull back, possibly get into the ribbon and give us a trade. We don't have anything here on the NQ because the black is in the red right there. Bullish long-term direction that is starting to diminish, and black is in the red, so we're not going to have a long trade there. Long-term direction is bullish, but we don't really have a higher swing. Over here is what we need to get up above and do a symbol. The ES just hit the ribbon right here. So on that, now we will be looking for an up close, a bounce off the ribbon. 88.75 will go up to 90.75. 88.75 up to 90.75. No, it's got, yeah, 88.75 is the low, so 90.75 will be the high. So looking for that up close there. That up close. And there it is. We got the up close. I gave us one tick of slip. Now we're looking for it to get up here to the prior swing high up at 90. Okay, right up there. Now it's got to go 4 ticks into profit, and we'll bump that stop to break even. We're not going to take a trade here, this green arrow over here, because we didn't come from a higher swing. But here we did come from a higher swing. So our stop should be 10 ticks away. And we'll go to break even after we get fixed profit. So one more tick to break even. There it is, break even. Now, profit, let's start here, 43.94, okay? That can be the first number we're going for right there. I have a target already set up here. I can drag that down to 94 for right now. And it just took me out. All right, and slide that over to the side. Now it has to put in a higher swing. Okay, on the gold right now, we want to see that pull back down and test the ribbon. And right here, sideways. Let me jump in here and see if anybody's asking for anything else. Hey, Foxman, do you want to see any kind of symbol other than futures, Foxman? I see you're in there asking questions in live chat. The gold right now, we're looking for that to pull back. The Russell, we wanted to put in a higher swing and then pull back. The ES, we just took this trade and we ended up with a break even on it. We want that to put in a higher swing and pull back. And on the NQ, we don't really have anything going on there. Okay. You're currently in a gold trade. Okay, you're in this gold trade right here. All right, let's take a look and see where gold should go. How about we do that? Okay, where is gold? All right, so the midpoint on gold, the next level up that it should get to is right here. Should get up to 1923. All right, so if you're in there, these are range bars, right? These right here that you're looking at are range bars. So there's no actual time element associated with these bars. They are based on these are 7-tick range bars. So once it exceeds 7 ticks, next bar. If it exceeds it at the top, it goes up to the next bar. If it exceeds it at the bottom, it goes down to the next bar. But our gold indications began back here. Okay. Now, I would have waited for something a little close to the ribbon like this one right here. Got a little closer to the ribbon. I wouldn't have done either one of these right here. I probably wouldn't have done that. I'd be waiting for this to pull back a little deeper, honestly. But this is either one of these in here with the black arrow where it came out to be oversold. The long-term direction was bull. That's the kind of trade you're looking for. So this level up here that I drew in a while ago. I don't know why. If I drew it in today, it doesn't look like I drew it in today, so I'll just get rid of it. Just delete that. That other chart that I just showed you, though, is a 30-minute. Okay, you're long from 1888. Okay, so let's go look at what I showed you just a second ago. Okay, so you're not in there scalping. You're long from 1888, you say? Okay, so how many days ago was that? If you look at this on a daily chart now, you're not scalping, so you're not, you're obviously not scalping if you're from 1888. Is a daily chart. 1888. So it hasn't been into 1888 since, well, I don't know when. Not in this contract. Oh. Okay, so this. All right, that is different. That is much different. Okay, let me go to SD so we're talking about the same thing. XAUUSD. And we're not going to do a range. Let's do this on a daily. Okay, so you're saying 1888. It hasn't been there since back here. Okay, since back here. Well, looking at it on a D chart, it's actually looking like it's going to go a bit more and then fail at the ribbon up here at 1918 is what it's looking like. bottom right here. From a daily chart, it looks like it's going to go up here and then fail some more. From 1888, you had it all the way up. I don't know that I would have held on to it beyond that. But let's look at it on the 30-minute chart. So just look at it today. It's been pretty choppy through here, and it's really got no indication or any reason to trade anything here on a 30-minute chart. Okay. All right, you trade on a 3-hour chart. All right, I don't know if we have a 3-hour chart. Yeah, we do, right here, 3-hour chart. Plenty of indications to sell it. If you were long from 1888, then you can see there are plenty of indications to buy it. But since then, on the 3-hour chart, I said sell here, sell here, sell there, there. That's what it says to me. Now, if you slide this back, 1888, if you bought it way back here, here we are, back in May. But still go beyond May. $18.88. Okay. So we had an indication over here, 1916, for a long trade. Way back here. I mean, there's no way I would have held that. I don't hold anything overnight, but through a lot of ups and downs. How long are you planning on holding that? Because you've obviously got something in your mind. It's target in your mind that it hasn't hit yet. Now, either way, how long are you planning on holding it? If you're using a 1-hour chart for that, there were so many times to sell that and take profit, or so many times. Yeah, since then anyway. I'll put this back on gold. GC futures. And I'm going to put it back on my little intraday time frame. Okay. 3%. I guess 5.3% from 1888. Okay. All right. Well, I'm going to put this on the Z contract. So we're going sideways here on the NQ now. We should have put in a higher swing here on the ES trade that we took. It didn't put in a higher swing. The Russell's actually got a trade right here that we can, the Russell right there. The Russell did put in a higher swing. It's pulled back and tested the ribbon. Now right here, you see the black line in the green. So if you go here for the trade rules say a long trade with the slingshot or a long trade without the slingshot. Now this particular one, we did not come out of the oversold. So it's without the slingshot. The black line is in the green. The long-term direction is bullish. The black line is in the green. So right there is right here. Long trade without the slingshot. Black line and ribbon must be on the bottom and in the green, and price must touch the ribbon on the pullback. Must also come after a higher swing and must in the long-term transition. Okay, so we have the higher swing right here. It's higher than that one, and the long-term trend is bullish. So right here, off the ribbon is the long trade. Okay, It's working out so well right now. There it is. Now, every trade we take on the 7-tick range starts out with a 10-tick stop. Okay. So, Fox, what kind of a stop do you use on that, Foxman? Just curious. The link for those trade rules? Yeah, you sure can. Go here to mytradingiq.com. It's right here, trade rules. Go to mytradingiq.com, trade rules. Right here. Okay. But you have to sign up for the free trial to get access to the indicators. The only way to get access to our indicators is to sign up for the free trial. Now, I just lost my DOM. Hang on a second. Let me go with my DOM. Here it is. Okay, so on the DOM right now, we're going to break even. And what it should do right now is get up here to 56.1, at least up to 56.1. Right? At least up to 56.1. That's what we're looking for. Right. Once it gets up there, we'll be able to read the DOM and give you more information. If we look here in the trade rules, every trade is made up of 3 different things, right? There's the entry, the risk management, and the exit. So we did the entry exactly right with these rules. The risk management, it's a 7-tick range bar, had a 10-tick stop to begin with, trailed to break even after 4 ticks in profit. We've done that part exactly right. Now the trade exit. Look left for a prior swing, high or low for an area of support resistance. We've met. I'm going to lock in some on this right now. We've done that already. And to read the DOM, to find potential is searching for. You know, the price is searching for. Right here is another one. I think we're going to go through that. The price is right here at 56.1. 56.1. That's right there. I think it's going to go through that and up to that number. Now, I don't actually need to put that up there. I can drag, well, we have a target all the way up here at 30 ticks. I can drag that one down. And so I can trail up and lock in a little bit more profit and do it that way. The ES higher swing here did give another green arrow, but that should put it in the higher swing now. And the NQ is coming out of this funk that it was in. Getting in there. I'm getting 10 ticks on this right now. And I like it up a little bit higher now. Okay. So if it gets up here, the 21 ticks in profit. But right now we have 10 ticks in profit. And that 12 ticks in profit. And 16. And it's almost got it. 18, get it. 21, actually I'm gonna bump it up some more. Okay, so I have 18 right there. All right, 18 ticks in profit. Okay, so if we go back, yeah, if we go back to why I took that trade and everything that I did in that trade rules, right? A long trade was long trade without the slingshot. The black line in the ribbon must be on the bottom and in the green. Price must touch the ribbon, right? So this is the ribbon right here. This is green. The black line needed to be in the green. On the pullback, price had to touch it. Price had to touch it. Any one of the lines in there had to touch. Okay. Now, when you get into the trade, because these are 7 range bars, there's 7. That means every bar that you see is the same height. Every bar that you see is 7 ticks high. Every single bar is the same exact height. So they're all 7 ticks high. Because there's 7 range bars, I use a 10. Now, what that means is my stop is 1 bar length plus a couple of ticks, a few ticks in this case. So stop would be down here when my entry is up here, right? And say after 4 ticks in profit, move the stop to break even. So we did that. Fix in profit, we move the stop to break even. And then the rules say, look for your exit. Look left for prior swing high for support resistance. We did that. That area was right here, 56.1. That was where my initial target was. Okay. And then it says, learn to read the DOM to find potential numbers the price is searching for. And that's what I read the other number that was at plus 21 ticks. There was another number even further up that I said I'm going to push it up even further because I saw another number that was further up. But it took me out at 18. But that was the whole trade in a nutshell. All right, this one was the same thing. This was the same thing. This was the same thing. This one right enough to get the stop to break even, I don't think. If you had exactly the right entry at 49.01, then it had exactly enough to get the stop break even on the NQ after 8 ticks in profit. Okay. So Foxman, take the free trial and you have access to indicators. The free trial is right here at this page where you went just a minute ago to get to the trade rules. If you down at 1888 and you held it for a month, that is not the kind of trading that we do in here. All right. Even our longer term stuff is not grabbing and holding for a month. It's grabbing and holding for a few hours. But the short term stuff that I hold in for a few minutes, like I just showed you. Right. And that trade with 21 ticks, that was $880. Right there with 8 contracts on. I think 880, 840, 840. And then 1888 wasn't the number that you were at. But either way, this is a long time, even for our longer term stuff. 9 hours is a long time. A few hours is okay. I don't know what time zone you're in. I'm in Eastern time, New York time. So 9:53 a.m. for you, 7:14 p.m. for you. It'd be completely different me. Either way, the NQ put in a higher swing, the ES put in a higher swing, the Russell put in a higher swing, and the higher swing. XAUUSD. I'm not sure the 1888 number is correct. It could be. I just don't see where it hit that today. Right, if we go back to 100 range on this. Pull this up. 1888. It hasn't hit that. We're on a different exchange. That's what it was. XAUUSDC, we're at 1888. It's today, 21 August, right? 21 August. 1890. I'm looking at something, I must have looking at something different. Okay. Wait, I'm trying to gate. That is, let me just put one of these on here. Yeah, I know. That's what I'm trying to find. Trying to find where it hit 1888. Okay, way back here it hit 1888. So we had indications way on 100 rate. If we look at it on an hourly, you said this was on an hourly for you. I mean, it's the same thing. That 1888, that line should still be there when we get back down there. But, you know, we're looking at hours back then. I don't know. Either way, that's not how we trade. You know, 30-minute time frame is our long time frame. You know, we do frames. We have, you know, precise entries. You know, we can close this bar right now, 36.25. I'd be buying 36.25 on an up close. Well, because it's gonna qualify for a trade set 75. Okay, it's gonna give you that green arrow, and that's gonna be a truck. So there it is. So I'm in at 36.50. Now I know getting in at 36.50 that I only want to risk 20 ticks on this stop is right here at 20 ticks away. I know that I've gotten into this trade, and what I thought is that it's going to get up to this level right here. Okay, at least that level right there. As it moves up, I'm going to trail my stop and lock in profit. So my maximum risk is right here. If it stops me out right here, then it stops me out, and that's okay. And it just did. It's okay because it's part of trading. But I did everything right. I did everything right. I know that if I do everything right, you know, I'm going to have a lot more trades like this where the win much more ticks than my stop out right there was with 20 ticks. And that's the way that we trade. If you held it for 9 hours, that's a long time. I'm not saying that yours is better or worse or anything like that. It's just different. So if you want to learn how to trade like this, then all you have to do is go here to mytradingiq.com, click on this right here. Okay, Fox them in. And you'll get access to the indicators. You can apply the indicators to whatever time frame you like. As I just showed you over here, we can leave time frame, you know, 2 or 3 hour or whatever. Arrows are still going to show. You'll have to adjust the sensitivity setting so that you know trade zones will be in the right places, but they're not too far off right here. You know trade zones to show when it's flat. When it's flat. See, in here we've had several sell indications that all worked out just going back a couple of days there. Okay. All right. Well, it is 1:20. I'm going to have to wrap this up. I don't see any more questions coming in either of the chat rooms right now. Yeah, check out the site and check it out. Right, it's going to be way different than what you've done if you held something for 9 hours. You know, usually my trades last a few minutes. Like this one I did on the Russell here a few minutes ago was a long trade for me. But that's me. We have other products. He's already gone over a bunch of it, but he's going to go over it some more either today or tomorrow. And they can last 2 or 3 hours, or 10 or 15 minutes, or 2 minutes. Depends on the market that you end up getting into at that time. That's it. All right. So one more time, if you've not taken a free trial with us and you want to, and the only way to get access to the indicators is to take the free trial, sign up for your free trial right here, 9:30 to 11:30. Just click on that. All right. The trade rules are right here. Once you do that, Boxman, you're obviously in TradingView. So when you sign up for the trial, the registration page looks like this. Okay. There's no credit card or anything like that. Just put in your information. And right here it says, give us your TradingView username. Once you give us that, then we'll enable it for you. And you'll have the indicators activated on your desktop right away. Okay. So go here to mytradingiq.com right there. All right. That is going to be it for the live stream. Thanks for coming, everybody. Hopefully y'all made one really good trade, one stop out. And there were some other trades that triggered in there, but I wasn't really looking at them. If anybody's got any questions, you can email support@cfrn.net or support@mytradingiq.com. And Yeah, and that's it. All right, guys. Foxman, we're going to wrap it up. We do another seminar. Foxman, we're going to start 9:15 a.m. If you sign up for the trial, tomorrow morning at 9:15 a.m. Okay, we'll do a live stream tomorrow morning at 9:15 too, but you're better off signing up for the trial because the caters to go with the live stream in the morning, and you'll have the whole session in the morning. The live stream in the morning is only 30 minutes. So the one that if you sign up for the trial, you get 2 hours tomorrow morning. Okay. All right, guys, that is really it for the live stream. Thanks for coming today. All right, D, passing back out. Fabulous Phoenix, Arizona, in Studio Bay, overlooking South Mountain, America's largest city park.
Recap of the morning session.
Today it took, yeah, let me go look. I think it took 19 minutes. Yeah, 19 minutes and 7 trades to get to $1,520.
Good job.
Thank you.
All right, guys. Good word for the day. Dealing with loneliness. Now, some people are lonely because there's nobody around them, but some people are lonely even in a crowded room. Psalm 102:7. I lie awake and am like a sparrow alone on the housetop. Wolfgang Dirks, a divorced, disabled loner, was found deceased in his apartment in Bonn, Germany, in December of 1998, 5 years after he died. He was 43 and died watching television. Neighbors didn't notice his absence. His landlord only came by after the bank account from which his rent was paid dried up. A TV guide was still sitting on the lap of Dirk's skeleton. It was open to the page of December 5th, 1993, the apparent date of his death. The television had long since stopped in the on position, but the lights on his 1993 Christmas tree were still glowing. When God created us, he said in Genesis 2:18, "It is not good that man should be alone. I will make him a helper comparable to him." You weren't created to be alone. You don't have to accept loneliness as your destiny. Instead, find a need and meet it. Often loneliness is not the absence of people, but the absence of purpose. Show a true interest in the difficulties of others. Resist making your own issues and worries the aim of every conversation. Do nothing out of selfish ambition or vain conceit. Rather, in humility, value others above yourselves, not looking to your own interest, but each of you to the interest of others. Philippians 2, verses 3 and 4. Be generous to others with your time, talents, and treasure. Not everyone will accept what you offer, but someone will. Pray for guidance and keep reaching out. God says in Isaiah 43:4, "To me you are very dear, and I love you." And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.